Wall Street is overwhelmed by the euphoria about AI chips. This burst is bullish for high-tech stocks and the benchmark stock indexes. US stocks rallied sharply yesterday amid growth in the shares of Nvidia and other chip makers. The US stock market is closing the week with the same sentiment. The S&P 500 climbed by 0.88% to close yesterday at 4,780 points. The index was only 0.3% lower than its historic closing level recorded in January 2022. The index eventually topped the long-awaited highest ever mark. In the New York pre-market, the S&P surpassed 4,800 points. Futures on the stock indexes rise by 0.5 and 0.7%. The S&P is expected to trade in the intraday Canada between 4,780 and 4,820 points. The next bearish target is seen at 4,774. The bullish one is at 4,827. US-listed Taiwan Semiconductor Manufacturing was the main culprit of optimism on Wall Street. Following poor quarterly results of the top US banks, the chipmaker gave the market hope for a decent corporate season. And these shares jumped by almost 10% after the world's largest semiconductor manufacturer and the Apple supplier projected revenue growth by more than 20% in 2024. The optimistic forecast pushed up shares of other market leaders. Chip heavyweight Nvidia rose by 1.9% to a record high and was the most traded company on Wall Street, with a nearly $28 billion worth of shares traded. AMD shares grew by 1.6% and also hit a record high. Broadcom, Qualcomm, and Marvell Technology added more than 3% each. Shares of the iPhone maker jumped 3.3% after Bank of America Global Research upgraded Apple to buy from a neutral. And this helped the S&P 500 Telecom Index gain 2% to a record level as well. On the back of the artificial intelligence hype, the market completely ignored macroeconomic data. Initial unemployment claims fell last week to a low of late 2022, and the Labor Department reported. It suggests strong job growth in January. Atlanta Fed President Raphael Bostic said he is willing to cut rates sooner if there is a surefire evidence in the coming months that the inflation is fallen faster than expected. Bostic previously said he expected it would be appropriate to cut rates in the second half of 2024, and traders now see a 56% chance of a 25 basis point rate cut in March, up from an 86% chance a month ago. According to FedWatch tool, Friday's pre-market trading completely mirrored Thursday's sentiments. US stock index futures rose on Friday as cheap and mega-cap stocks continued their gains. Shares of advanced micro devices, Nvidia, Broadcom, Qualcomm, and Marvell Technology added about 1 and 1.5% before the opening bell. Super Microcomputer raised its earnings forecast for the second quarter, sending its shares up 13.5%. Apple also gained 0.6% as yields on most US treasuries went down. Other mega-cap stocks continued to rally in the pre-market, and the only exception was Tesla, which continues to lose after news of discounts in China and Germany. Market optimism about the technology sector enabled the benchmark S&P 500 top its 2022 record close in the pre-market. If traders are able to keep the index at such elevated levels, this will be a signal of the beginning of a bull market. There was also some relief in the risk assets as the Congress once again averted the government shutdown, although it only pushed the issues forward 6 weeks to March one. As for the economic calendar, the data will be released after the opening bell, in particular reports on existing home sales for December and preliminary consumer sentiment index for January by the University of Michigan. More Fed policymakers are expected to speak today. San Francisco Fed President Mary Daly, Chicago President Austin Goolsbee, and Vice Chairman for Supervision Michael Barr. The currency market is unaffected by Wall Street optimism. Popular currency pairs are trading quietly intraday. The US dollar is taking a backseat. Before the opening bell, the US dollar index was at 103.39 or 0.14% lower. The instrument is likely to trade in the intraday CAD between 103.26 and 103.75. The next targets are determined at 103.10 and 103.90. The dollar retreated lower from a recent highs on Friday, but remained on a track close in the green this week. The summit in Davos, alongside economic data, gave currency traders a lot to think about. The prospects to the dollar and maintaining restrictive monetary policy for longer with less damage to the economy have not gone away. We do not expect significant fluctuations in the forex market today. The US dollar index will be able to record a weekly growth of 0.8 and 0.9%. The Canadian dollar was able to recover from a 5-week low. In the New York pre-market, the USD CAD pair opened the American session at 1.3474 or 0.07% down. The instrument is expected to trade in the same intraday CAD between 1.3436 and 1.3520. The market traded calmly today, with the dollar loosening its grip, helping the loonie backlash of reports pointing to consumer weakness, though only in November. The flash estimate for December was more optimistic. Retail sales in Canada slipped by 0.2% in December from a month ago. The consensus suggested zero growth following a 0.5% rise in October. According to flash estimates, Canadian retail sales could have increased by 0.8% in December 2023 from the previous months, marking the sharpest rise in 11 months. And this and other data this week indicate that the Bank of Canada will wait until at least June to cut its key interest rate as inflationary pressure remains strong. Bitcoin hit a 5-week low of $40,484 overnight as traders booked profits following the approval of a spot Bitcoin exchange-traded funds. In the New York pre-market, the asset was able to recover and was trading at 0.6% higher at $41,340. According to the intraday outlook, the flagship crypto might trade within the corridor between $41,100 and $42,600. If support does not withstand the pressure of sellers, the token may fall below $40,000. An alternative scenario suggests a recovery to $42,880 and $43,100. Our review of American markets is over. Subscribe to InstaForex TV channel and we will keep you updated on the daily market developments. Good luck in your trading and see you online next week.